introduction. So hey guys, welcome back, and today we'll be talking about home loans and how they're structured, and now I'll hand over to Dad to give you some information about this topic.
Okay, so you want to know how home loans are structured? Well, that's actually quite surprising because I'm not sure that a great deal of people are aware of how home loans are normally structured. So what exactly would you like to know?
Well, we're just wondering today, how are home loans put together?
Well, home loans, mortgages, there is a legal difference between a home loan and a mortgage. Now, one of them has it that if you default, the bank can just come on in and repossess the home. The other one has it that if you default, the bank has to actually go through a court process to gain possession of the property. Just means for a lengthier process. But how the actual home loan is structured in terms of repaying the debt means that if you take a look at any graph setup, will tell you that in the first year, maybe the first 3 years, well, the first year, whatever your weekly, fortnightly, monthly repayment is, we'll pluck a figure out of there. We'll say you pay $300 a month. So your $300 a month you pay on your home loan. 99% of that money for the first year, 99% of your monthly payment for the first year will go on interest, leaving only 1% of that money you pay per month going off the principal of the loan. Now, I've heard it said that this is just the way they structure the loan, the repayments. No, this is done for a reason. If they really wanted to level things out, they'd say, okay, we'll make say 60-70% perhaps of or even 50%, whatever, of the money that you pay each month, or whatever frequency that you pay your loan repayment, will make a much lower percentage of that money go on the interest. But it's done the way it is done for a reason, and that reason is that usually after a 12-month period has passed, you've signed up for a 25 or 30-year home loan. After the first year, the bank will have sold that mortgage security to a third party, something like a pension fund or whatever, some kind of fund. They'll have sold it for a profit, but they'll still keep claiming or getting paid their monthly mortgage repayment as if they still collect that money for themselves, but they will have sold that mortgage security to a pension fund or some mortgage fund or wherever, and they'll have sold it for a profit. So if they've made you out a loan of say $150,000, they'll have sold that mortgage debt for a profit to some third party that you don't know about. And so the question, I suppose, then is a good question. Back in the days before the GFC, how many of those people who apparently defaulted on their home loans did so within the first 12 months? So, but the point is that a lot of people don't realise that when they sign up for the mortgage, the finance contract, that they probably won't pay the bank. The bank itself won't receive that final check or that final payment 30 years down the track, because they'll have sold that mortgage security probably within the first year after having written the loan.
So is this like affecting people that are getting loans or ripping them off, or?
Well, I believe that people are not being informed well enough when they first take out a loan. Some finance providers will simply not tell borrowers that, hey, when like say if you take out your mortgage in January, by the time you're in December that year, at the end of the year, the bank or the financier will have sold that debt, that mortgage security, to a third party for a profit, and they're just merely collecting the payment as more like an agent for that fund that has bought that home loan.
So people aren't being informed about this that's happening, and so when they go to sign the paper, it's not on the paper that this...
Well, I don't believe it is, and there's something else that's not usually not on a finance contract either, and that is that, for example, if a borrower borrows money, might be $150,000 to buy a home worth $150,000, what the borrower sometimes is not being told, and it's in the fine print of the finance contract, is that the bank can and will do some type of valuation on that property within the first 6 months of that home loan being granted. So the borrower has borrowed the money, they've bought the home, they're doing everything right, they're making their monthly or fortnightly or weekly payments, and now that they don't miss a payment. So, but suddenly they find sometimes that the bank sends them a letter demanding debt reduction. How is this when they've never missed a payment?
So why do you think the banks are trying to hide this from the people?
Money.
Money. They want
Ways to make more money. I mean, if you were offered a finance contract from a bank or a financier, and it said that, at some point in the future, if this debt on our books, if we do a valuation on your property, and we find that the property, the value of the property has gone down in relation to what is owing on it, say if they've lent you $150,000 or $100,000, but the value of the property has gone down to say $120,000 or $100,000 or whatever, they can demand debt reduction, or they can sell that property to get money, even if you've never missed a payment.
So this isn't fair on the people.
This isn't fair on the borrowers.
On the people that are borrowing the money.
This is why a lot of borrowers need to take their finance contract, what the bank's prepared to lend them, to a solicitor and have a solicitor look over it, because unless you're up to date on contract law, why would you sign a finance contract without having a solicitor look at it?
So what do you advise to the people that are going to be borrowing money from the banks to buy a house or a car?
Well, when a bank issues its letter of offer, indicative or, okay, we're going to lend you this amount of money, sign here and the money's yours, take that letter to your solicitor and ask them to go over it, and looking for anything that is unfair, or did you know about this? This is in the fine print of this finance contract, because once you sign it, the bank will have had their solicitor draw up the contract, and they're assuming that you've got your own solicitor to do legals for you. So, but the question is, how many people actually have a solicitor go over the finance contracts from a bank before they sign them? And say, okay, is there anything fair or not fair? So some banks will actually have it that they can repossess the property and sell it if the property value falls below what's owed on the property to the bank. So if you've borrowed $150,000, $130,000 and the actual value of the property falls to say $120,000 during a normal property value cycle, or anything else for that matter, the bank can demand debt reduction, or they can repossess the property. That'll be in the contract, but one thing normally stops the bank from doing that, and that is bad publicity if they do.
So
if you've never missed a mortgage payment, and you can say, well, show me where I missed a mortgage payment, that doesn't always have anything to do with missing a mortgage payment.
So I guess this leads into the question, who owns the banks?
Who owns the banks? Well, that's a very good question. It depends if it's a first tier, second tier, or third tier lender. Now, I'll give you an example. Some of your mortgage or home loan brokering businesses, some of the leading ones in the country, are owned by some of the bigger banks. 100% shares. Like there's one of the leading mortgage broking companies in Australia. It's 100% of its shares are owned by one of the big four banks.
So does the government own the banks?
No, you're talking retail banks?
Just your normal Commonwealth, ANZ.
Well, they are. I think they're actually owned by shareholders. They're licensed through the government, through APRA and ASIC. I think APRA actually, the Australian Prudential Regulation Authority. But in terms of who owns the banks, like the government or whatever, they say that the government owns the Reserve Bank of Australia. I believe the opposite is true. I believe the Reserve Bank owns the government.
So, okay.
But that's just my belief. I mean,
Yeah.
my opinion.
Sure.
I've got more reason to have that opinion and that belief than what I have to say that the Australian government owns the bank.
Oh, okay.
Owns the RBA.
So I guess like lots of people would have their own beliefs on this subject.
Oh, certainly. And it's a part of living in a democracy. I mean, you don't have to be right all the time.
Yeah.
But the fact is that, yeah, I believe that the Reserve Bank of Australia owns the Australian government.
Well, thank you for this interview today. I hope this has advised some people about the banks and home loans and stuff like that. Is there anything else you'd like to say?
No, just thank you.
Okay, see ya.